Hey everyone! Welcome back to the channel. Today we're diving into what went down in the US stock market on November 1st, 2024, and we'll also get into what's on the horizon for Monday's trading day. It's been a wild ride recently with the ongoing global economic developments, plus Q3 earnings reports rolling in fast and a lot of chatter around the Fed's next moves. So, let's break it all down, analyze what today's numbers mean, and try to read between the lines to make some predictions for Monday. First up, let's recap what happened today. It was a mixed day across the major indices. The Dow Jones Industrial Average saw a slight uptick, closing up by about 0.3%. Investors focused on some strong earnings reports from big-name companies like insert relevant companies from November 1st here, which managed to lift sentiment in the blue-chip space. Meanwhile, the S&P 500 stayed relatively flat. It wobbled back and forth throughout the session as traders digested tech earnings and the latest jobs data. The tech-heavy NASDAQ composite, on the other hand, slipped a little lower, ending down about 0.4% as tech giants faced profit-taking after big earnings beats in October. One of the main drivers today was the employment report. It showed slower than expected job growth, which ironically wasn't all bad for the market. Why? It eases the pressure on the Fed to raise interest rates further, as a tight labor market can keep inflation sticky. But a mixed jobs report is always a double-edged sword. It gives us hints about consumer spending trends, but it also reflects economic slowdown concerns. Next, let's zoom into the sector moves. Energy stocks rallied hard today, thanks to a jump in crude oil prices after recent supply concerns resurfaced. With OPEC Plus continuing to hint at output cuts, we saw companies like ExxonMobil, Exxon, and Chevron, CVX, getting solid bids today. If oil prices stay strong, energy stocks could stay in favor into next week. In the tech sector, we saw a pullback after a solid October. Stocks like Apple, AAPL, and Microsoft, MSFT, faced some selling pressure. Now, part of that could just be profit-taking, but there's also worry about the impact of rising rates on the high-growth tech names. Consumer discretionary stocks showed resilience. Big players in the retail space, like Amazon, AMZN, are benefiting from holiday shopping momentum and stronger-than-expected consumer spending. Investors are still watching closely to see if the fourth quarter shopping season can keep pushing these stocks higher, despite the broader economic uncertainty. And, let's not forget about financial stocks. Banks had a decent day, with JP Morgan, JPM, and Goldman Sachs, GS, in the green. These stocks are still being boosted by higher interest rate spreads, but investors are cautious given that if the Fed eases back on rate hikes, it could limit gains in the financial sector. Looking ahead to Monday, we've got a few things that could sway the markets. First up, manufacturing PMI data is set to be released. This is one of the best indicators we have for understanding the health of the industrial sector. If we get a strong print, it could lift industrial stocks and even spill over into other sectors if it boosts overall market confidence. We're also awaiting more clarity on Federal Reserve policy. As of now, most traders are betting the Fed will keep rates steady in their December meeting, but any hawkish remarks over the weekend from Fed officials could shake things up on Monday. So, what can we expect when the markets open on Monday? Well, based on today's trading and current sentiment, here's what might unfold. Energy stocks. If oil prices remain elevated, energy stocks should continue their upward trend. But, beware, these stocks have been volatile, so any unexpected dip in crude could lead to a swift reversal. Tech stocks. Investors might continue rotating out of high-growth tech into more defensive plays, especially if PMI data shows economic slowdown. That said, big tech remains fundamentally strong, so any dips could attract bargain hunters. Financial stocks. With interest rates holding steady, we might see a balanced performance here. Keep an eye on banks with diverse revenue streams, like JP Morgan, as they could be better positioned to handle any potential rate pauses from the Federal consumer discretionary. If there's one area that could surprise, it's consumer discretionary stocks. With holiday shopping picking up, this sector might outperform on Monday, especially if we get positive early holiday spending data over the weekend. Safe haven assets. Don't be surprised if there's some interest in defensive sectors and assets like utilities and gold. With mixed economic signals, investors might seek safe havens to hedge against uncertainty. Now, if you're trading or investing, here are some tips to keep in mind for Monday. Watch pre-market data. Economic data, especially global data from Europe or Asia, could give an early indication of how the US market will respond. Consider market sentiment. With the recent Fed rate hold, market sentiment might lean more defensive, especially in rate-sensitive sectors. Adjust your portfolio or trades accordingly. Keep tabs on big movers. Stocks that had big earnings moves in the past week may see volatility as investors digest the numbers. Stocks like Amazon and Apple might offer quick trading opportunities if they open with momentum. Plan for the long haul. If you're investing for the long term, focus on high-quality stocks that can withstand economic uncertainty. Tech giants, blue-chip consumer stocks, and financials with strong fundamentals are likely to hold up well even if volatility picks up. Alright, that wraps up today's video. If you found this breakdown helpful, please give it a thumbs up and subscribe for more daily updates on the US stock market. Let's see how Monday plays out, and make sure to tune in for the next video, where we'll continue to analyze market trends, stock picks, and economic updates. Thanks for watching, and have a great weekend.